You're tuned into Stocks to Watch, where Global One Media offers exclusive one-on-one discussions with company leaders to help you make informed investment decisions, especially today's discussion. I'm Ashley Berry, and today we're welcoming John Feneck, president of Feneck Consulting, an international corporate communications firm skilled in many areas, including alternative investments, retirement, asset allocation, and more, always contributing valuable insights. John, great to see you again.
Thanks a lot, Ashley. Likewise.
So, John, you analyze commodities companies. Now we know that gold has really broken out. So what equities are you looking at currently, and how does the relationship between the gold price and the gold equities actually work? If you could break that down for us.
Sure. So gold has broken out this year, and last year it was holding a higher level than it had previously to the financial crisis, which we saw in March of last year, just 15 months ago or so. And it was holding 1900 for about 5+ months back then, and we were saying this was extremely bullish action, even though people wanted that 2000 plus price. That having it hold a new low was really bullish. We call that making higher lows on a chart, right? Previously, the low was around 1800, then it became 1900 last year, and now that we're above 2000, many are saying that 2000 is the new low, right? And I agree with that because we're at about 2410 right now on gold. I mean, we're knocking on the door of 2500 an ounce, which really was our target to be fair for the entire year this year, because we started again a long way from here in January. So what's interesting to us is that this move in gold has happened without any black swan event, which so many of our competitors had talked about.
Yep.
That was needed, to see gold at this level. We always thought that central bank buying combined with more, high net worth retail buying, and then finally getting some mutual funds and ETFs into our sector eventually would be enough to get it to a price like this. I just didn't see it happening this quickly. So how that relates to gold equities is when you're a producer of gold, you're in a much better position than, say, someone who's exploring for it or developing a mine, because you're actually producing at this price, right? So your cost, let's say at a Newmont, might be 1,300 an ounce, and let's just say gold goes down to 2,300. You're still making $1,000 an ounce out of the ground. All in sustaining costs is a acronym known as AISC. And a lot of people like myself will look at that to get a gauge. It's not perfect, but a gauge for how much a company, is how much is that costing the company to produce 1 ounce of gold. So if you're Newmont, you're just going to produce hand over fist cash, right? Because if you're producing at 1,300 an ounce and the price is 2,300 an ounce, as a producer like that, you're constantly selling it at that price into the market, right? So you're able to capture that. If you're an exploration company 5 years away from production, you're basically going up in terms of stock price based on the expectation that you will get to production, right? That's a whole other scenario. And sometimes in a really hot gold market like we saw in 2020 or 2009, you'll see these companies just fly based on, the fact they might get somewhere. We like to kind of build a portfolio of all three of those categories. So producers, developers, and explorers, because that way clients can have more of a blended approach, right? They're not going to put all of their money into one of the three buckets. So in the producers, I mean, Agnico has really led AEM. They're trading at, 69 and change right now. Stock hit, I think, 71 here recently. It's just delivering on all levels. They're a conservatively run company, in my opinion, for a large cap. They're the second largest holding in GDX, which is a $15 billion ETF. So we own that. When you look at the developing side, there's some interesting news recently on Treasury Metals, which is TSRMF. I spoke to Jeremy, the CEO, actually this morning, and he's very fired up about the combination with the company they're merging with, because it not only brings more ounces of gold to the bottom line, but it also brings a lot of cash, right? So like when you merge companies, sometimes there can be added benefits that the average client doesn't see in a press release. But the real takeaway from that call was that Frank Giustra, who's in the Mining Hall of Fame, is basically heavily invested in the company Treasury is merging with. So Treasury didn't have Frank as a shareholder before. Now they do through this acquisition, right? And Frank is adding more money, which gets the attention of more high net worth gold investors that, oh, wow, Frank likes the deal, right? So I think this deal was done around 1470, so 0.147 on Treasury metals, and the deal itself was done around 16.9. So, when you see a premium to the market, that indicates that, that wasn't a dilutive deal to Treasury metal shareholders. It was actually an accretive deal. So I would encourage people to look at the recent news on Treasury metals. It was pretty exciting for that company based on where they are on Ontario. And now they're between 3 and 4 million ounces of gold, right? So, like, I think something like that could be a takeover candidate within the next 2 years, or Jeremy is strong enough as a leader to just go build it himself.
And I really think that it's excellent that you mentioned sort of the three tiers where you talk about producers, developers, explorers, the excitement around that. We've spoken with so many companies, even in the exploration stage, they talk about the price of gold right now. And as you said, there's so much enthusiasm around that so that they sort of set their expectations high, like this is where we're going to be, even if it's 3 years from now, but who knows what will happen there. So I really appreciate you mentioning that. I also understand that your number one holding is silver, which is really started to follow gold's breakout. I would say great foresight there on your part. Maybe you could tell us a little bit about your years of experience, of course, in silver and really how you applied that to investing in silver equities.
Sure. So I started in silver and gold roughly in 2000 when I was getting beaten up in tech stocks. And I went to my advisor and I said, how do I protect what I've earned? And he said, hard assets, real estate, gold, silver, really good advice. So I started to buy physical silver back 24 years ago because I couldn't afford physical gold, even at those little prices. And I think that's true of the average, investor. They're going to buy silver coins before they buy, gold coins, right? Because the price point is just much more accessible.
Mm-hmm.
So if clients or listeners of yours are interested in getting access to the metal itself, have them email me. We'll have our email address in the show notes. And I think I know a couple of dealers that are global that have 20 years of experience that have real vaults in the US, right? Like these aren't fly by night companies that you find online or something. And I'd be happy to share that information with your listeners because getting access to physical gold and silver is definitely part of our strategy. We have about 8.5% of the portfolio in physical silver. That's our largest holding. But I will remind people that most of that position was built years ago. I added to it in 2020 in April when things got absolutely just, destroyed. And then this year, when things were starting to move, I bought more physical silver at 24 and at 25.01 an ounce. So I put two new tranches on, this year, which is new for me. I haven't bought it in 4 years, right? But I saw it starting to make what we get, call higher lows again, holding 21, holding 22, holding 23, knowing that 26 was major resistance. I just had a really good feeling that it was going to break that level this year. And when it broke that, that brought in a test of 30, which is actually major resistance on silver. And now we're above 30 as we speak. So that's extremely bullish. I'm surprised that some of these silver companies are still trading at so low levels after something like that. But again, remember, this just happened Friday. This is like, 2 business days after that. So, this is going to get a lot of press, I think. If we can hold that 29 to 30 level, I'd be very excited and I'd be buying silver equities. So a couple of the names that we, like there are Aftermath Silver, AAGFF. Aftermath is, they made a significant discovery. They put out a significant report February 29th that I think largely got overlooked by the market because they announced a financing in March right after that. So when you announce a financing, that usually means you're diluting shareholders. So the stock moved a bit and then it got taken down on the news of the financing, but it has recovered nicely since then. So, we talked about that on your program once before. I think at 14 or 17 cents, it's trading at 30 cents now. So again, 100% gain in a few months on something that, just was so undervalued then, but it's still undervalued now. So I would encourage people to read that February 29th release because it's showing you as an investor that this is not just a silver and copper company, which in my view would be enough, but this is now a manganese company as well. And 91% of manganese in 2023 was produced by China, which is not a friend of the US, right? This is a country that is literally creating monopolies on a lot of these smaller commodities very quietly. And it's a problem for our country. It's as an American, you're looking at world dominance in certain commodities by China at this point as we interview right now, right? Like I think in 2 years, 3 years, it'll be different. But why would you not invest in something where there's a supply shortage now, regardless of what it is, right? Like supply demand drives every market. So I think that's a really interesting one. I really like Silver X in Peru as well. And I've just started to buy another company, Element 79 in Peru. I like James as a leader at Element 79. I like Jose as a leader at Silver X. One of my screens, as you know, is really management, people that will get back to me, people that are, have 20 plus years of experience in the sector, you know, that are in good jurisdictions or jurisdictions to me that provide value at this current, entry point. And that's how I see Peru. Peru really got what's the word? Castillo really messed things up there for a lot of investors for a couple of years. He got jailed about 17 months ago. I think his term is up really soon, but I seriously doubt he's going to be a problem in future, elections in Peru, because Jose and another CEO I know live there full time, and they say that things have been a lot better, in Peru since Castillo's been just pulled from the situation there. So I'd say that's true of Argentina too. I started to look at Silver and Golden Minerals and a bunch of these Argentinian silver plays because, as you know, there was a crazy leader there for many, many years who taxed the heck out of mining companies, and now she's gone and a new guy's in town and he sees the value of mining, and so things have changed, right? As a value investor, you love situations like Peru and Argentina because they're going to get you paid eventually. Like the investing public is not on top of this as much as someone like I am that does it full time, every single day, right? And that's why listeners should align themselves with people like myself, whether it's me or not, to say, I'm a lawyer, I'm a doctor, I'm a construction worker, I don't have time for this. You help me, understand the sector better, John. Like that's sort of what I'm hoping for as this rally starts to mature is that people will spend a little money. I put a note out to my clients today saying, if you had just done this, this, and this, you would have had, A, B, and C here in terms of returns. But many of you didn't do anything. You're watching this rally. You're not acting in the rally, and that is sort of like, I know Ashley, you've done some coaching in your career. Like that's what I do with my clients. It's like, hey, I'm not trying to beat you up. I'm trying to say, learn from your mistakes and let's partner on this going forward to get a better understanding of what your risk is, of what the market is bearing right now, and take advantage of this opportunity.
Yeah, and I like the fact that you mentioned it's so paramount to be actively involved, actively engaged, because not only with your company, but also with shareholders, that's so important to them as well when they are trying to get more information about a company. And so I know that you've mentioned this many times that it's so important that people are accessible. CEOs are accessible. Now, also in part of your conversation, you mentioned copper. So industrial metals like copper and nickel, they've also started to increase in value. So what do you think about these commodities and how are you investing in those areas specifically?
On the industrial side, I mean, two have really caught my attention most recently, and that's copper's move. The copper price, we were saying on many shows last year, was just ridiculously low because Goldman, Morgan Stanley, like some of the largest financial institutions anywhere were saying that copper would be at much higher prices in 2025.
Mm-hmm.
And so when you see that, we looked at that and said, that's an 18 to 24-month run. Like that's not a long period of time to wait for higher prices. So let's get invested in copper names now that will have leverage to a move in the copper price. Copper really had a hard time getting through $4 a pound earlier this year. When it broke four, it brought in a test of 450 pretty quickly. And then 450 kind of hung out there for a few weeks, and then now it's just completely broken out. Copper in the last 10 business days is probably up 10% as a commodity. So, some of these copper stocks are up 20 to 50% in the last 2 weeks. So it's just, again, like tremendous leverage to a move in a commodity. That's true of all commodities pretty much. It just varies by the commodity. I think gold and silver are the most rabid investors. And when you see a move like silver, that's what, like I said earlier, I mean, anything above $30 an ounce is going to get the attention of a lot of big money eventually.
Mm-hmm.
I personally feel if any of the Wall Street Bets crowd or Reddit crowd is listening, like, we know that you helped us in 2021 in our sector, and we're looking at what was happening then, and you learned what we already know. JP Morgan and some of these banks are bigger and badder than we are as retail investors. But in a rally, these companies are in trouble because they're short some of these commodities. I am 100% on that. And speaking of shorts, I just did a presentation with the CEO of Power Nickel, Terry Lynch. I know you interviewed him previously.
Sure.
The ticker is PNPNF. Just so your listeners can get an idea of what happens when you're short. It gets ugly sometimes. And I never short our sector because I'm an advocate for the sector, right? I think it's disingenuous to be shorting something that I'm, partnering with. So Terry and I did a presentation in Washington, D.C., April 30th. And 20 minutes of our 40-minute presentation was about his website, Save Canadian Mining, that he does on the side. He does something, I wouldn't say, for free because it's, part of your week. Every week he's investing all this time to do this. But it's a great cause because it's identifying the fact that there are nefarious parties in our sector on a regular basis, some of which should be punished for their behavior because it is egregious. And by that, I mean, he identified over 50% of his float was sold short. But when you go to shortsqueeze.com, you don't see that. Like, you can't see it as a retail client. It's what we call naked shorting. And I won't get into it now because Terry does a better job of explaining this. And we don't really have time. But I would encourage people to look at our presentation April 30th. I think you'd learn a lot. It's free to go to savecanadianmining.com and just, sign up so you can follow this story. It's fascinating. And I think that when you look at that share price, since we did that presentation, I think we were trading around 28 to 29 cents US, and we're trading at 48 cents now. So in just 3 weeks, that stock is up over 60%, albeit on good news. They had great copper results, like off the chart hits on copper. But I think some little investors will then tell bigger investors, right, through social media and other venues, hey, this is a good cause. This is a good guy. This is a good company. This is going to work. Why are these guys getting shorted? It's just amazing that this predatory kind of behavior exists.
I like that you use the word predatory because that's exactly what it is. Very unfortunate. Hopefully, on a brighter note, let's look at the second half of 2024. What do you think it'll look like for Fed policy and commodities in general?
Sure. So Fed policy, if we started, and I think I mentioned this on our last interview, if you looked at January 1st, the consensus was 4 to 5 rate cuts for this year. Many of the big investment banks had that out there. Then it got to 4. Then it was 2 all of a sudden. And now we're questioning 2 cuts. That said, I have no idea how the broad market is trading this well. Like, I could not tell you. I thought, and I said this in our interview, I remember around November, December, that I expected this year to be a little bit more challenging for tech and for some leadership kind of sectors. And it really hasn't been. I mean, there's been some pullbacks in stuff like Tesla and Apple and stuff, right? But in general, it's been a pretty darn good year for the broad market. And I think that when the Fed really gives us direction, which hasn't happened yet, in my opinion, as to the direction of cuts, the market is going to take that poorly because we're not getting 2 or 3 cuts, maybe, right? We're getting maybe 2, definitely 1. But when is that 1 cut coming? And who cares? It's 25 basis points, right? You raised rates so much. 1 cut is like kind of disappointing to me. So I still think the other shoe is going to drop. I don't think that's going to happen right away because summer is usually like kind of benign trading. And we had such a good first half that I don't think it happens overnight, but you could start seeing some selling, in my view, between September and November, because you've got a lot of things happening then, right? You've got the BRICS meeting, which is BRICS stands for Brazil, Russia, India, China, South Africa. These are countries that have formed a coalition to, in my view, eventually create a currency that is going to rival the US dollar and the euro. And that meeting happens in October in Russia. Like, come on. Like that's got to be something significant, right? You have the US election in November, obviously significant. No one knows what's going to happen with Trump between now and then. No one. I mean, he could be in jail. He could be eliminated from the ballots. He could win the election. No one knows. And so the unknowns really support commodities. Like silver and gold love fear and uncertainty. That's what they thrive on. So that's what I said at the beginning of our interview today. It's interesting to me that we're seeing this run without any of that, right? Like what happens if we do get that? And I think unfortunately, when you look at some of these scenarios, the Fed, the US election, the BRICS meeting, just the obvious that we're fighting two wars very quietly as Americans. I mean, what if those things escalate? There's a lot of things that could happen in the second half that I think would drive our sector, that meaning commodity sector, higher.
Great points. The unknowns support commodities. Sounds like a great tagline for somebody or some company. John,
that might be the title of this interview.
Could be. Exactly. There you go. John Feneck, president of Feneck Consulting. Always such a pleasure speaking with you. Thank you again so much for your time and really lending this important information to our viewers and listeners. And as always, we look forward to having you on Stocks to Watch again soon.